few questions that have come from the audience. We're going to cover those. One piece of housekeeping first. Just a reminder, many of our clients are also friends of ours. They know us very well, and they have our personal cell phones. And I have to emphasize that we can't take any business-related questions or instructions on our personal cell phones. It has to go to our work emails or give us a call at work. So if someone texts me, hey, John, should we sell our shares of Apple? I cannot respond to those type of things. It's basically illegal. And there's been hundreds of millions of dollars of fines for organizations, investment firms this year because of that issue. So just a reminder, if you got investment questions or questions on your account, please call me at the office or email me at the office. And is Jerry able to join us?
He's not quite on the call quite yet, so I will read the first question for us, if that's all right.
Hey, Josh is here. This is great.
All right. The first question is from a client. Is in simple terms, why are there such current fluctuations in the market, not only day to day, but even in a single day?
That's a great question. The bad news with that question is it probably means you're looking at your account too often if you're looking every day. But you are right, and we brought in a chart of volatility. And there has been a huge spike in volatility recently, which means in day to day and intraday, you have stocks moving much larger than normal. This is called the VIX index, and it shows volatility in the market. You can see it hovers around 15 or 20 on the index all year long, and then it spiked to almost 40 in July and August. That means the market is twice or three times more volatile. So we had more stocks jumping 10, 15% a day or going down 10 or 15% a day. The NASDAQ, I think, was down almost 4% in one day. That volatility is caused by market noise. And we had some economic data that came out that made investors very concerned about the possibility of a recession. Now, they've calmed down since then. It's kind of corrected itself. But for that few weeks, the volatility was extremely high. This is not uncommon. It's going to happen every year. We can't predict when, but it did happen. It is calming down again. But you see, most of the year, the volatility was pretty low, so you didn't see a lot of fluctuations. But obviously, you noticed it. We noticed it because we are looking every day.
All right. The next question we have for you is, I read that China has some demographic issues. Can you elaborate on that?
Yes, and I have some charts we can bring up, but it's interesting about China and its economy. 7, 8 years ago, every time China had a whiff that they were slowing down, the U.S. stock market and European stock markets would fall. And I remember one time we were doing a presentation in January, it might have been 2016, 17, I can't remember. But there was an issue about China slowing from 7% growth to 5%. And the market fell 600 points intraday on that news. It's interesting that we were so concerned about that 6, 7 years ago. It has continued to slow, and quite frankly, it's probably growing at 4% now, maybe less. The markets has moved on. They don't pay as much attention to it as they used to. But there is bad news for China demographically. This is a country that everybody knows had a one-child policy, started 40 years ago. Well, that's catching up with them. They don't have a lot of young people anymore. And we're going to show you a demographic chart. See if we can hone in that. Yeah. And you see these charts for most countries, you'd like to see this more of a pyramid. So your oldest people are up on the top and the youngest on the bottom. And of course, red is female and blue is male. Look on the right side, you see the United States. We're not quite a pyramid, but we still have a significant amount of people at the bottom who are going to grow up, go to work, and replace our older workers. In China, they have a real problem. If you look at the left-hand side, especially 24 or 30 and under, there's a lot less males and females than there are from 30 to 60. So who's going to take over those jobs? They're not. The population is basically shrinking. And there's some questions whether those population numbers are even correct at 1.4 billion. Uh, there's sources that think they're off by 100 million or more, and most of those are young people that they've overcounted. But this is a serious problem when you look at the demographic chart going forward. 1.4 billion Chinese today is the biggest population they'll ever have. It's going to shrink from here, and some people think in the next 50 years it could be down to 800 million. So they could lose 4, 5, 600 million people because they're just not having enough babies. Now, this is happening to other countries too, like Germany, South Korea, and it is a problem. It is a problem worldwide. In the US, we don't have a severe problem. We're in better shape. Plus, unlike a lot of countries, we do accept immigration, and that'll help us. But this is not a good thing for any economy or country to have this type of demographic chart.
All right. Thank you, John. Next question, I heard that recently the U.S. is energy independent. Is that true?
Yes, I was talking with some clients recently, and I mentioned one of the reasons we're still fairly bullish long term on US stocks in North America is because of our energy independence. And the clients were surprised by that. They didn't realize that we're energy independent, probably because for the last 40 to 50 years we haven't been. And anybody in my age group remembers the lines of cars at the gas stations in the 70s trying to get gas because we didn't produce enough. We had to import everything. That's changed because of the fracking revolution in the last 15 years. And we have a graph on that as well. We actually today, if you look at the top side of this chart, there's a blue and a gold line. The blue line is consumption. That's how much we're consuming. Look, this goes back to 1950. In the 70s and most of the 90s into the 2000s, we were consuming, the blue line, much more than we were producing. Look what happens around 2010, or about 15 years ago. There's a big spike in the production, and the production has climbed above the consumption. And it really happened about 4 years ago. So now on the bottom side, green is imports and red is exports. Exports are now larger. We're exporting more energy than we are importing. So this is good news for us long term. It's good as a country to be energy independent.
That's a great chart, actually. I noticed that O'Hare Wealth Management doesn't buy small cap stocks. What is your reasoning behind this, John?
That's a great question. Historically, I've been much more in favor of large capitalization stocks or mid capitalization stocks. The mid cap stocks have always been, in my opinion, the sweet spot because mid caps traditionally have earned more than large caps or returned more than large caps, but they have higher risk. On the other hand, they've returned 96, 97% of the return of small caps with 1/3 less volatility. And that's a good deal. If I take 1/3 less volatility, I get most of the return. But in addition to that, the change in the last decade especially has been that small cap stocks have become less attractive because they don't come public anymore when they're small. Everybody's heard of private equity. Well, private equity has gotten so large that companies go with the private equity groups before they come public. So now, for example, when Uber finally came public, it was a $50 billion company. Well, that's a large cap company. So they're waiting because they don't want to be public too early because there's a lot of cost in administration with being public. And if you look at another chart we have showing you how many companies have come public, see if we can zero in on this. Yeah, on the left-hand side, it shows you the number of listed U.S. companies and market cap. And you look back in the 90s, and I remember this, the heyday of the dot-com bubble, we had a lot more listed companies. We had over 8,000 companies in the market. Today we're down to under 6,000. So 3,000 have disappeared. The average size of those companies is that gold or orange line. You go back to the 90s, those average companies were 3, 4, 5 billion. These were smaller companies you could buy. Now they're averaging 40 billion. And if you look at the right-hand side, it shows you the market value when these companies came public. And you look back in the 80s, they were like 200 million, $300 million. And they would come public after they were 6, 7 years old. But today, the average company market value when it comes public is, am I reading that right? Is that 2 billion? Yeah, at least 2 billion. And they've been around for 11 years. So they're coming public. They're waiting longer to come public and becoming public much larger. So the opportunity set just isn't there like it used to be. In fact, it's one of the reasons we've talked to clients, if it's appropriate, to consider some allocation to private equity, because that's where we are going to get to these emerging, fast-growing companies.
All right. Well, thank you so much for answering those questions, John. Like always, we always appreciate people sending questions in. So if you have one, please send this to us. You can give us a call or send the question right into our email at service@o'harewealth.com.
And our book recommendation, we'll finish up with that. The book is Frostbite, and I just finished this recently, and it's amazing. If you think back to just 150 years ago, there was no such thing as refrigeration. There was no cold storage. Now, 70% of the food we eat has been in cold storage at some point, which is kind of amazing when you think about it. And the network we've built out. Well, this is why we have apples of all varieties available all year long. They can freeze them, then bring them out. We don't have to wait for the season for those fruits and vegetables. But it's amazing what it's done as far as getting food to people too. You don't think about it, but 150 years ago, you couldn't ship meat overseas. It would all spoil. Now we ship, if I go out to dinner tonight, I'm probably having lamb chops from New Zealand. And they'd be shipped over here frozen. The ability to move food around the globe because of cold storage has meant more calories able for consumption for everybody in the world. But I found it fascinating how much they spend on it, how complicated it can actually be. And a side note, one of the largest IPOs, initial public offerings this year, was a cold storage company, one of the largest in the country. I'm trying to remember what it was called. Oh, it's not coming to me. It's like Legacy or something. It's I can't remember what it is. But, that shows you it's still a very big and fast-growing business. Fun book. I had a lot of fun reading this one.
Yeah, JJ's been talking about this one nonstop. His family went to an orchard this last weekend, and the pink pearl apples, and why we've never seen these before. They're yellow apples with the pink meat, and they don't freeze well. So this book is very relevant to even everyday life for us. It's very interesting. Right. Well, once again, from all of O'Hare Wealth Management, thank you very much for joining us. Please provide feedback and share these calls with people. And if you have any questions or need anything else from us, please feel free to reach out. Our contact information is at the bottom of your screen. And thank you so much again, and have a great rest of your week.
Thanks, everybody. Thanks, Josh. Great job.
Thank you.